For more on Draghi and other central bankers, let's welcome Bob Sinche. He's the global head of foreign exchange strategy at RBS, joining us from Stamford, Connecticut. Good to see you, Bob.
Good to see you.
Hope is the story of the day. Hope for central bankers to come to the rescue. Are you a believer?
Well, I think that was actually relatively encouraging for the head of the ECB. We're not used to that kind of encouragement and rational, I think, analysis of what's going on. So, I think the ECB is standing there readily acknowledging the tightening of financial conditions in the Eurozone. And they know that when financial conditions tighten, that's something the ECB can do something about. So I think in that context, it was refreshing. Markets really hadn't expected the ECB to act in front of the Greek elections and in front of the EU summit. And so they certainly did not pre-commit, something that President Trichet would never do. But I think they signal they're ready to take action as the economy weakens, and that's encouraging.
Do you expect them to have to take action?
Oh yeah, absolutely.
When?
They have a meeting a month from now, and certainly I think markets and we are expecting that they will cut rates at least 25 basis points at their meeting in July. Again, I think they don't want to take any of the pressure off some of the sovereign governments right now in taking action. I think they probably didn't want to ease in front of the Greek election. But certainly they look like they're ready to move, and I think they'll just wait and see what happens with the Greek election and the EU summit. But the economic data, I think, are going to force their hand, along with potentially lower inflation numbers.
So the question then, Bob, if you see the European Central Bank having to move eventually, does the Federal Reserve here in the U.S. follow and move with it?
I think that's a bit of a tougher call. It's a tougher call because while the U.S. data is softer, it isn't dramatically softer. And early in the year, the Fed tempered their enthusiasm about the employment data, saying it could be a bit seasonal. Now I think we're seeing the offset to that, and maybe they're going to temper their pessimism a bit. The other concern we have, actually, is that inflation expectations, if anything, have picked up in the last week or so in the U.S. One of the measures we look at suggests five-year break-even inflation expectations around 2.75%. When the Fed adopted QE and QE2, it was closer to 2%. So, I think Bernanke will testify tomorrow. If he had his druthers, he might call it a sick day and not show up, because I think he wants to probably not make a decision this soon or have to signal a decision this soon.
You think the markets got a little ahead of themselves, pricing in another round of quantitative easing or Fed action?
Well, our U.S. team thinks they eventually will. But again, as a number of press reports have indicated, there's a lot of disagreement and dissension. You see that in the FOMC members' comments in their various speeches. So they're probably moving in that direction. Not sure they have all the data they would really like to take that move. And I think that's why they gave themselves additional time, including up till the September FOMC meeting, maybe to take some action before the elections.
Do you see this move today, euro rebounding, stocks rebounding, as something that's likely to last? In other words, the dollar, DXY, coming off of 10% rally since October. Is this the start of a turning point?
Well, certainly in the currency markets, there were some signs that markets were overextended. You look at the momentum in euro dollar back late last week. It was actually the most extreme negative momentum, the RSI as we measure it, during the entire crisis, going back to 2010. So markets are pretty extended. Pessimism was pretty extreme. Didn't take a lot, as we saw today, to create a little bit more optimism. What I note is that the rebound in equities look to be a bit more aggressive than the rebound in the euro, and I think that's an important signal. The euro's not really rebounding as much as equities, and that would tell us that the general trend for the euro is still probably to the downside.
Good point, Bob. Quickly, before we let you go, given this new world that we live in where you foresee more central bank action, what is the trade? Do you want to be buying gold, for instance, on that?
Yeah, I think the anti-currency looks good in a world where central bank heads, maybe Japan will have to intervene and expand its balance sheet, the Fed, the ECB, maybe the Bank of England also. So certainly that would point toward the anti-currency gold.
All right, Bob Sinche, thanks for the tips. Global head of foreign exchange strategy at RBS Securities.